Hello, I'm Ataman Ozyildirim, Director for Economic Research at the Conference Board, and this is your first Economics Watch Brief for emerging markets for 2019. Emerging markets have sustained their collective GDP growth rate in 2018 at a decent 3.9%, the same as in 2017. Looking ahead, however, this group of countries is likely to see a significant slowdown in growth to 3.6%, according to the Conference Board's latest projections. Several factors, including tightening monetary policy in the US, rising trade protectionism, volatility in oil prices, and slowing growth in China prevail. For the first time since mid-2017, the Purchasing Managers' Index in China fell into contraction territory, signaling an industrial slowdown and possible job losses. Industrial profits also declined, a trend that is likely to continue as trade costs rise and credit conditions tighten. In addition, a softening housing market and decelerating retail growth make for downbeat news for China's outlook. In contrast, export orders for Indian manufacturers were helped by the weakened currency. However, national elections this year will be a major constraining factor for India's overall outlook, as the government spending will cause fiscal slippage. Investors are likely to take a wait-and-see approach to the outcome of the elections. Further, introduction of new e-commerce regulations will impact the operation of foreign online retailers in India. In Brazil, manufacturers ended 2018 on a solid growth path, helped by improved business confidence. However, weak external demand, contraction in new orders for capital goods, and the decline in manufacturing jobs are concerning for its outlook. In Mexico, confidence also improved after the presidential election in July, and with the easing of trade relationships with the US, we had anticipated a more positive outlook for 2019. However, the lack of a clear policy initiatives by the new administration so far and the consequent rise in policy uncertainty hurts the short-term growth prospects. Overall, we expect China and India to see a slowdown, and Brazil and Mexico to improve only marginally, thus resulting in an overall decline in the emerging market growth rate for this year. I'm Ataman Ozyildirim, and this was your Economics Watch Brief for emerging markets.